Hello, this is Dan from InsideBars.com, and in this very basic introduction video, we're going to be going over what is an inside bar, how we can recognize it in the market, and how we can utilize this pattern to be more profitable with our trades. And that's what InsideBars.com is all about. It's an automatic alert system. You select the time frames and the tickers, and those alerts come out when the pattern has formed, and it's a heads up to pay attention to that pattern because a break is imminent, and with that break is going to come a clear entry signal. Checking in on Twitter, GoPro, X, and CHK on the daily and weekly time frame. So Twitter, very, very tight, a small range, small volume today. We have a double low at 1827, and that makes this an inside bar on the daily time frame. A break of 1852 tomorrow, and we look at 1890, and a bear break of 1827, and we look at the dump low down at 1797, and the daily middle Bollinger Band will be just above 18 tomorrow, so that will act as some support as well. So the bears still have a little bit of control since the dump, in the sense that we broke the higher low pattern, we set a lower high, and now we're watching to see if we come down and set a lower low. Otherwise, if we do see a bull break and the bulls can get over 1890, we're going to be looking right back at the high of this move that the bulls have seen, which would obviously show strength. The weekly time frame is a potential bull flag pattern. Even though there's a wide range and lots of wicks, you could draw a parallel support and resistance line on a flagpole pattern after this flagpole to the upside. So it is still a very bullish consolidation pattern on the weekly time frame for Twitter. So if the market bulls do show up, we will look for Twitter bulls to try and see some follow through. GoPro bulls showed up today. They did reject from a couple of resistances, but the high volume spike, we saw that momentum on Friday, and the bulls really carried it over in a big way today. The clear bull signal was breaking 880, the double top, and as soon as we got over 880, we made it all the way up to 918. We did reject from the upper Bollinger Band. We rejected from the 100-day moving average resistance, unable to close above those levels, but the bulls have proven their strength in the short term by getting over these resistances. We do still have plenty of resistances to be watching. The bulls are nowhere near being out of the woods. We've got 940, and then these two levels we just rejected from, but we're much further away from support. We're not at risk of breaking support anytime soon, which is a sigh of relief for the bulls. All about the weekly middle Bollinger Band, 885, that's where we're closing. 4 trading days left to go. If we close above it, we're going to be looking for further upside. Close above this weekly middle Bollinger Band, and we're looking at 940 and then up to 975. GoPro has been on the bear list because we did see this dump and then lower highs and lower lows. But like I said, the bulls are proving themselves, so it's important as traders to be able to shift our positions and to pivot and react to changing market conditions. So that means, number one, exiting bearish positions in a timely manner so the losses aren't too big, and then either flipping over and playing the opposite direction, or just taking a step back and waiting till you see a better setup that you like. X on the daily time frame, still rejecting from exponential resistance. This now makes almost 3 weeks in a row. Pretty astounding that we are still unable to get over this level. So we've got support of 1920, 19, and 1855, resistance of 2005, and these exponential resistances which just keep dropping, and we have not closed over them at any point. The bears are extremely strong. We are looking for a bounce. When the bulls get over this exponential resistance, I do believe we're going to see a 5 to 10% move. But if that never happens, then we're never going to see that move. So we have to patiently wait for these bulls to prove to us that they have strength. We did have a bullish reversal hammer last week, trying to see some follow through from that and looking to break the lower high pattern on the weekly. We have to get over 2063 in order to do that. And the 100-week moving average to close above is 1971 for the bulls to be in control. In the short term, of course. The bears definitely own the overall past couple of months. CHK on the weekly time frame did get a high, or on the daily time frame, did get a higher high, but it was a gap and trap scenario, and we saw profit taking on that open. So 587 resistance. There's a gap to the downside at 560, but the bulls have a little higher low and a higher high here now, so they do have control in the short term, but the weekly time frame, we're right at that resistance. The 100-week, the 50-week, the middle Bollinger Band, they're all lining up in the same levels, 588, 592, 599. So the bears definitely have control with those moving averages as resistance. If we can get over those levels, that will signal a break in the trend, and we'll be looking up at 659. Base of support down at $5, and again, I'm just watching this weekly pattern. I'm not trading this on the daily time frame, waiting for a clear break of either support or resistance to indicate the midterm direction. On the verge of a bullish MACD cross, ideal close this week would be over $6 for the bulls. They still have some work to do. I appreciate you watching. We'll check back in tomorrow as always, and I hope you have a great night.